Yo, what up, fam? It's your boy, Big Walt, back with more Blockchain 411. In today's news, Janet Yellen is making headlines yet again. And if you know anything like I know, it's no good for crypto. Anyway, find out more. Rock with me. You may recall a video that I did about a year ago. I think the title of the video was, "Is Janet Yellen the Stablecoin Killer?" The reason why I made this video is because the Fed and the SEC had been signaling for quite some time a very antagonistic attitude against cryptocurrencies in general, but particularly stablecoins. And, one of the reasons why, I think it's natural and logical for certain central banks to be antagonistic or have a negative perspective towards stablecoins is because they really impact the Fed's ability to control the monetary policy. You've got Tether and other tokens that are basically the digital equivalent of dollars. This takes the control of M1 and M2 out of the hands of the banks. And basically usurps that power to what the Fed, I'm assuming, considers interlopers. So I get why there would be sort of this perspective against the stable coins, why there's this sort of bias against cryptocurrencies in general. I haven't quite put my finger on it, although it's got to be quasi-related to the stablecoin issue. Anyway, from an optical perspective, I don't think the U.S. wants to take the same position that China's taking, in terms of outright banning cryptocurrencies. But you can kind of see some of the proposals or policy proposals encroaching or sort of coming up to the line to where if the cryptocurrencies aren't outright banned, then, only sort of like, large incumbents would even be able to play in that space, which would then make cryptocurrencies a moot point. But anyway, let's get to why Janet Yellen is in the news today. Yo, if you notice a slight wardrobe change, you're not going crazy. I actually had to re-record this because I had some issues with my audio. So anyway, pardon the optical illusion. But back into it. Unless you've been living under a rock, the crypto market is getting hammered. And not only is the crypto market getting hammered, the broader stock markets are also getting hammered. And that brings us to the point of this video. If you take a look at the Forbes headline here, Treasury Secretary Janet Yellen issues serious crypto warnings as sudden price crash hits Bitcoin, Ethereum, BNB, Solana, Cardano, and XRP. Now, it's not that, the markets are already down. Not that that's not enough, but, she's got to kick crypto while it's down. And this is what I'm saying. I don't think she means any good to crypto. That's my personal opinion. It could be that she has the greatest of intentions, and I'm just not aware of it. But let's get into the article a little bit. And this was on the 11th, so just date this because the markets are moving fast. Bitcoin, Ethereum, and other major cryptocurrencies have fallen sharply as a fresh crypto crash weighs on the troubled market. The Bitcoin price has dropped under 29,000 per Bitcoin, its lowest since late May, as stocks suffered their worst since January, their worst week since January, following a red-hot inflation report that exceeded economists' forecasts. Ethereum crashed more than 10% after developers again delayed the long-awaited upgrade. Now, Ethereum 2.0 is close, but no cigar. If you've been paying attention to the news, then you know that on the Ropsten test network, they did a merge of the new code. And it was mostly good, but there were some issues. So they further delayed the mainnet code merge. Anyway, you couple that with the fact that the Federal Reserve has been indicating that it's going to increase interest rates. I'm actually recording this after one of the biggest interest rates in decades. We just had a 75 basis point increase, but this is the type of thing that is impacting all markets. So it's not that somehow cryptocurrencies are invalid, as an investment. It's just that the markets are getting hammered, and cryptocurrencies have been made to be seen as an on risk asset class. And, I can discuss my perspectives about that. But one thing that's not happening in the crypto space is there's no central authority increasing interest rates to contract the money supply. And there's no central authority that can expand the money supply as it relates to cryptocurrencies. And most people don't get that. And so the crypto markets are still attached to the regular markets. But as soon as people start to get that in their heads, then I think we will start to see at least Bitcoin and perhaps Ethereum more as a hedge against inflation, as opposed to responding to it in the way it is now. So this article basically is just, there's some major gems in here where Yellen, poo-poos the entire crypto space, and even, I won't call them veiled threats, but there's some gems in here. She says, as it relates to crypto, it's not something that I would recommend to most people who are saving for their retirement. She said, to me, it's very risky investment. Then she goes on to say, it's a highly speculative asset. And, I think people should be aware it can be extremely volatile. And I do worry about potential losses that investors can suffer. Now, look, as the SEC, secretary, or Treasury Secretary, I get it. That's her job, to be concerned about these things. But we can't act like cryptocurrencies are the only volatile and risky asset class. I mean, most institutional investors have, portions of their portfolios in emerging markets, for instance, and places that are now being, destroyed, by war. And so, those things are equally, if not more, risky. And speaking of institutional investors, that's who Yellen is speaking to here. I mean, she's, on the one hand, she's certainly speaking to the average investor, but really she's speaking to the institutions. And the institutions have the ability to move markets. So if you are, for instance, somebody who's managing like CalPERS or some big, pension fund, for instance, if you had money in crypto, to the tunes of billions of dollars, and you just took it out, that's going to add further downward pressure to the market. So this is what I mean when I say she's kicking crypto while it's down. If she's moving institutions out of the crypto markets, then that's just going to dump more. It's going to dump more coins and depress the prices, which is going to increase this bear cycle where there's just going to be more selling. On the flip side of that, if you're an institutional investor and you were thinking about getting into crypto, if she's going on and on about how risky it is and how, I wouldn't do it if I were you, you by all means, if you want to, go ahead and do it. But if I were you, I wouldn't be doing it. You know what I mean? Like that might make people reconsider whether or not to invest their funds or a portion of their funds into crypto. Again, and that could be supporting upward pressure that she's preventing based on her words. So, the Treasury Secretary's words carry a lot of weight. And right now she's putting her thumb on the scale, on the side against cryptocurrencies. What else did she say? Oh yeah. She goes on, suggesting that Congress could regulate whether Bitcoin, Ethereum, or other cryptocurrencies could be included in retirement accounts such as 401k plans. Quote, I'm not saying I recommend it, but that to my mind would be a reasonable thing. So now she's shadowboxing. She's forecasting that, hey, you probably don't want to get your 401k, if you're Vanguard or you're some other like major, retirement fund, or mutual fund that retirement funds invest themselves into, basically saying that, don't bother getting into crypto, or I wouldn't get into crypto. This is a lot of money that can move into the crypto space, which would uplift the price, right? She's basically using her power to keep that money on the sidelines, or making that money just forego crypto altogether. And so it's not helping. This is one of those things where, you can make these statements knowing that your words have power, and then you can turn back around and point to it and say, see, I told you so. So it's almost like a self-fulfilling prophecy, and she has that power. Anyway, that's basically what's going on here. On one hand, when you think about it, she's been gunning for stablecoins for a minute. And in some regard, she succeeded. Luna and Tether was crushed. I mean, it's no longer. And even though they try to come back with this Luna 2.0 or whatever, that's kind of a joke. That ship has sailed. It's not going to work. And because of what happened to Luna, I think confidence in other algorithmic stablecoins has all but evaporated. And so, there are stablecoins like Tether, that are backed with hard assets, although there's not 100% parity between the value of Tether and the hard assets. At least, they're backed by something. But I think, people have lost a little bit of confidence in those. And Yellen, in her, continued march, in my opinion, to destroy stablecoins, she's not helping that at all. And so, one has to ask themselves now, now that she's got this victory, over one of the major stablecoins, is she, expanding the remit? Is she getting greedy? Does she now want to just destroy all of crypto, given that, Luna's gone? It makes one wonder. You have to look at what happened in the news recently. You've got Luna basically evaporating, so that's one down. And then a couple days ago, Celsius suspended all withdrawals, all transactions, because it's basically insolvent. That's two down. Although we have to keep our eye on Celsius to see what the current state of affairs is. But just as recently as I think yesterday, Nexo was making public statements about their willingness to buy Celsius assets. So doesn't look good. So when you put all these things together, Luna down, Celsius down, the Treasury Secretary continuing to drop the hammer on all things crypto, it just doesn't look good. And so in order for crypto to prevail, we need some W's, because we're taking a lot of L's right now.